Joshua Hayes here with your February 2nd stock market wrap up, and it's going to be probably a quick one because I can't see how much has changed. Not much has changed. The S&P 500 had a pretty, not nasty, but had a sell-off going intraday, and so did the NASDAQ. Let's look at the NASDAQ so you can see the tail at the bottom on the daily. Oh, actually, the NASDAQ did open at its low of the day. It just went a little bit lower, so not a big deal there. However, you can see the NASDAQ went from its lows of the days to close up near the highs, up 1.22% today. However, I want you to realize that despite the NASDAQ's 1.22% gain, if you look at October 27th to February 2nd, you will see the market is up, or down, excuse me, a negative 0.76%. So we were up more today than we were at all since October 27th. So since October 27th, we're down not even negative 1%. So we're still at the exact same place we always have been. And that's been dancing around this 50-day moving average. I assume as the 50-day moving average gets closer, it'll probably end up being more bearish, possibly, to reverse against it. Or if we can see the price pattern break out above the 50-day moving average, we can then see it break out above the 200-day moving average, and which would give these tall green volume bars that are showing up some more credence compared to what they look like compared to September and October. If this somehow was a flush out, the lower volume would make sense. However, I just think it's too early, and I think overall it's still pretty nasty. And that's why the NYSE couldn't even finish positive today. Now let's go to October 27th on this one, see how far off it is. That's the 23rd, 24th, 27th. Wow. So since the October 27th to February 2nd, the New York Stock Exchange has moved negative 0.6%. This is a market moving nowhere fast, and that's why it is a stock picker's market and not a lucky person's market. Because during this time, we've had shorts like, I think RDK down 25%, PG down 16%, Casey down 24% for us. So we've had some short winners during this time while the market is just flatlined. So let's go ahead and take a look at what the Dow Jones Industrial Average looks like. See if it's still flatlining like all the rest. I'm pretty sure it is. Let's go to the 27th to now. A little bit better, negative 2.92%. However, if I go out, I can see, okay, so it's not that bad. So just negative 2% since that time in 3.5 months. At least it's moving. The NASDAQ and New York Stock Exchange just aren't moving at all. So that just continues to show you that there's an overall weakness in the market. You can still see, I'll get up close and I'll use the downtrend line. Let's press the letter D. And as you can see from here to here, you can see that there's a negative slope. And I didn't even connect it well, so let me erase that and redo that. You press the letter D. You get your crosshairs. Now you connect the tops. And as you can see, it's still, even on a short term, a downtrend. I know you can't see it very well because I have the same color as the 50-day moving average. So maybe I can make that an off-white. Oh well, I'll figure it out later. I know how to do it, but I'm just right now going to do it. So let me go and get off that. Control D. So you can see short term downtrend now, especially for the past 3 days. Down 4%, as you can see. So short-term downtrend. Sub-intermediate term from October to now, flat as flat can be in the stock market. And no, this is not a bullish consolidation pattern yet until we break out above the 50-day moving average on strong volume. Because with the 200-day moving average still above, leaders still breaking down, no new leaders showing up, it's still a negative position overall to be in. So anybody that's telling you the stock market is bottoming, they are obviously drinking a lot of Kool-Aid, and they are looking at stocks like Bank of America and C. They must be. I don't know what they're thinking. And Goldman Sachs or something like that. Because if we look at the leaders, we have like Coco, Seco, APOL, and ESI in the education industry. That isn't necessarily bullish. Because these stocks last time, let's go to ESI, or APOL actually is better. Look at from 2000 to the 2003 end of 2002. So during the bear market where a stock market fell, the NASDAQ fell over 50%, The Apollo Group went up 395%. And I do believe it was two stocks like PhoenixOnline.com and Apollo Group, if I do remember correctly. I can't believe even now 2000 to 2002 is like blurry now. Like, I'm just shocked, man. I'm aging fast in this market. Or it feels like time's not moving at all. However, we can also look at SEDC during this time in 2000 from the bear market that we had to the 2002, 289%. And like I said, what did the NASDAQ do during that time? I think most of you know, but I'll let you guys review it in case you don't know. During that same time, it fell 66% while those stocks run. So those stocks historically do well when the market's net bad. So that isn't a good sign to be seeing Seco. SEDC is one of my huge winners on the short side. Coco and ESI rallying. Yeah, it's good if you're long these. I'll give it to you. You've got a 16% gain in the past 9 days, so very, very good. However, long term, could these stocks fail? Yeah, they sure could. Let's see how much more time we have left. But if this is a long-term bear market, they probably will do good. Let's go and look at China to show you how China's stock market looks right now. You can see that it had a why doesn't it show any price movements recently? Oh, because of the new year. That's why. That's why. So the Shanghai SC Composite still overall in a more bullish trend up from the November, October, September lows than the New York Stock Exchange is. And actually from the November lows, let's see here, the Chinese stock market has gained 17.87%, while the New York Stock Exchange from the November lows has gained 11%. So now you can start to see the Chinese stock market start to lead here. This is where we're going to start seeing a change, I believe, in this bear market that we're having in all these countries. You can look at the Chinese SSE, Shanghai SC Composite right there and compare that to the NASDAQ going back to 2000. So it looks a lot better for the Chinese stock market on the SSEX, Shanghai SC Composite, even though, because it just looks more round overall, the sell-off. Let's look at commodities. Oil today had a very bearish day, down 3.27%, closing at $40. Once again, I believe oil is going to be stuck in between a $35, $50 range. And unless you like buying support, selling resistance, I'm not that interested. Let's look at platinum. Platinum had a negative day today, however, bullish tail, so it's holding in there. Silver, negative day, down 2%, however, a bullish tail, so it's still in there. Gold, a very bad day overall. As you can see, it opened at the high of the day, 929, and closed at 904.70, near the 902. However, as long as it holds, as we go out on this, you can see the tail on it, just the baby tail. However, if this is support, and you can see all these like hammering out patterns back here in the 20th, 21st, and 22nd, gold can hold the 250-day moving average and bounce higher, and a pullback would almost be, if it can bounce off the 250-day moving average, a very blessing right now, because that would put the 50 over the 200. See how much time we have, 8 minutes, 46 seconds. We have excellent time. I'm doing great today. So the last one I want to look at is the dollar, and of course, the dollar is still moving higher. If you went long the dollar with the move, really strong move above the 50-day moving average in July, you have a 17% gain right now, and if you waited till it got above the 250-day moving average, you still have a 15% gain, and things are looking very good. So right now, in the short term, the dollar looks more bullish than gold. However, gold still had a tail today, and as you can see on every day you see here, tail, tail, even on a sell-off here, when it sold off 2.49%, tail. Sell-off here, 3.98%, tail, little tail at the bottom. Negative 1%, tail, and then all bullish days, tails and open bodies, tails and open bodies. Negative 1.28% day, tail. Today, even a baby tail. So commodities are still looking good. The metals, oil is not. Our stock market is not. Even though China is still in a big downtrend, I bet you're going to be able to find the next round of leaders that go up 1,000 to 2,000 to 500 to 800 to 700% in this market before you will see it in our market. So if you have access to Chinese stock market, Chinese stocks, and can somehow get them to plot something that would, let me go back to a past big winner whenever it was at its top. And if you can get something that looks like this going on your scans, and let's go to what it looked like whenever there was the major breakout, you can go long the next beautiful Chinese stock that sets up in a setup just like that. I'm going to go ahead and end it here. This is Joshua Hayes at BigWayTrading.com. Part 2 and Part 3 is coming up next, everyone. Aloha.